All right, guys, welcome back to your favorite segment. I don't know if that's true or not, but this is Tepid Takes. So this is our second iteration of Tepid Takes. This is literally the opposite of a hot take. This is Anuj bringing me some of the headlines from the week, and I don't read the news, so I have no idea what's going on in the world at large. So I'm looking at this, and with my very well-formulated opinion on the matters, I'm going to tell you exactly what I think. So take this all with a very hefty amount of salt. This is not even a cold take. It's just a tepid take. It's just lukewarm at best. So let's dive into these headlines. This first one says, Commerce Department reports economic gains. The U.S. Department of Commerce reported that the economy grew by 2.7% in Q3 of 2024 compared to the same quarter a year ago, indicating strong economic gains due to Americans making and spending more. Okay, so here's interesting, right? Anuj put this in the team document here, and I clicked on it. I was like curious about it. I was like, okay. The first thing I would say, having been in real estate for many years, is that you can doctor numbers to tell you whatever you want. It's like, I can't remember who said it, but there's three types of lies. There's lies, there's damn lies, and there's statistics, right? Like you can make numbers say whatever you want. One of my favorite lines is that numbers don't lie, but I can make them say whatever I want, right? So the numbers themselves are objective. But the narrative that I put behind them, well, let's talk about that. Because I looked at this article and I did not get the feeling that this was an objective read of the numbers. This felt to me like a very subjective interpretation and a little bit of cherry picking and a little bit of, I will say, revisionist history. Because one of the lines in there said, this is the strongest economic growth that any president has experienced in the last 100 years. And I'm like, you can say that, but I don't feel that. And I don't think the average American feels like this is the strongest economic growth we've ever experienced in the last 100 years. I'm sorry, but like, it's just not. You can tell us that we're not in a recession all you want. You can tell us that people are making more money all that you want. You can tell us that inflation is under control all that you want. And yet the reality of the boots on the ground, the people that are living in the streets, like not living in the streets, but like literally like people who, live and then work in the streets, it's not that. I'm sorry, like I don't buy it. And the problem with this is that there's so many different ways that you can interpret the numbers. You can pull whatever you want out of there, and without a full picture of it, I'm highly skeptical. So I look at this and I'm like, yeah, you can tell me that all you want, but that doesn't match my reality. That's not matching the reality that I'm hearing. And I have a unique perspective on this because we own 600 units of apartment units, right? We own 40 apartment complexes here in the Twin Cities. We house Class C, Class B residents, people who are making $30,000 to $60,000 a year. I have a pretty damn good pulse on how they're doing financially based off of how much they're paying or not paying in their rent. So I'm going to look at that number and go, skeptical. Okay, let's take a next one. Actually, okay, I'm going to skip this one. This next one is U.S. housing inventory increases. It says the housing supply reached a 4-year high with a 12.1% year-over-year increase in November, primarily due to unsold homes lingering on the market amid high prices. Now, this is a really interesting headline for a couple of reasons. It's saying that the U.S. housing inventory is increasing, so there's more supply. This is a good thing in theory because one of the issues when we look at supply demand is when there's not enough supply, demand goes up. Therefore, the price on the supply increases. It's very simple, right? This is economics 101. And if you understood no other concept beyond supply demand and how supply demand disequilibriums create issues, you do pretty good. So this is relevant for us again with real estate because one of the things that people will do or governments will do is rent control. They'll put into place a rent control measure to try and cap how much profit or how much you can charge for a rental unit. The idea is there's capped supply and there's too much demand for that supply, which means that the apartment owners then get to increase the rents on that because there's too many people needing places to live and there's just not enough inventory. So when that happens, prices increase. So rent control goes into place to say you can't do that. Okay, so then what ends up happening is actually people stop building and they take their units offline. So people who would have been inclined to take their building and put it on the market, they just sell it or they just stop doing work on it and they let it fall into disrepair. And so now what ends up happening is you actually have fewer housing units on the market. You still have the same amount of people, same amount of demand competing for it. And we saw this in St. Paul overnight when rent control went into effect over there. They stopped, all the building developers stopped thousands of units that were coming online to bring affordable housing to meet this demand issue. They just stopped because they're like, there's no profit here. If you're going to cap our upside, we're not going to build there. And so it just exacerbated the supply-demand disequilibrium even more. Now, what this means then is there's not enough housing. There's too many people that need it. And that has been an ongoing issue in the U.S. for the last number of years. There's last I looked, there was we're about 4 million housing units short to fill the demand issue. And the problem is, over the last decade, since 2012, we just haven't been building enough new supply because there's too much red tape, there's just too much bureaucracy, there's rent control in these large major metropolitan areas. There's a lot of reasons for this, but we're just not building enough new inventory because there's just not enough incentive in it for the builders. And as a result, the demand keeps increasing. We have immigration, we have people having babies, we're having a growing population. There's still growing demand, but there's not enough supply. And this has been creating a big housing shortage, a big housing issue. And it's been great then to be a real estate investor where you can buy this thing because you can be sure it's going to be more valuable in the future because people can't build new things next to it to compete you out of the market, right? Because we have this captive free market. So this headline is saying, hey, U.S. housing inventory increases. And so that sounds like a very good thing. And you'd go, oh, sweet. That means we're building again. We're meeting the demand issue, and that's a great thing. However, when you read the article, what you find is it's not actually that. It's not that we're increasing the inventory on the market due to more supply coming. It's coming because people are putting their houses on the market and they're staying there longer. They're not selling as quickly because they're not able to get the prices that they expected for these things. And so instead of selling their houses at a lower number, they're keeping it at the higher number and it's staying on for longer. So the inventory of houses that are on market for more than 30 days has increased by 50% year over year. So what that means, if you take that in conjunction with the first article I read, right? Remember where they said like economic growth is great, right? Well, if that's true, if economic growth is as great as they're making it out to be, then why are people's houses not selling at that same rate? Those two things they don't make sense, right? And so you look at this and you go, oh, something about these narratives doesn't make sense. Anyways, okay, I got really into the weeds there about real estate, about economics. I don't know if that's valuable for a lot of you guys, but let's go ahead and pivot. Let's do one more tepid take here. This one is the top AI stocks for 2025. This says analysts have identified key stocks poised to benefit from the AI revolution, including NVIDIA, Microsoft, Palantir, Tesla, and Alphabet. Yeah, I love AI. Here's my rule of thumb. And I did a video on this about 2 years ago when ChatGPT first came out. I said, listen, during the California gold rush of the 1800s, a lot of people uprooted their lives. They went out there in the hopes of striking gold. You know, they went out there and they're like, I'm going to find the next vein of gold. And there's a lot of people that did that. They became wealthy. Huzzah. Good for you. But there's one demographic, one group of people that during that gold rush across the board got wealthy and did really well. And they weren't the ones that were actually out there looking for the gold. They were the ones out there selling the shovels to the people that were looking for the gold, right? And I think about that because when it comes to AI, it's not about who is going to go out there and find the next vein of gold. It's all about who is selling the shovels, the underlying infrastructure, the underlying platform. And so when I look at these companies, NVIDIA, they're not selling AI. They're selling the shovel, aka the chips that allow people to run complex computational systems, large language models on their chips, right? You look at Microsoft. They are playing with their own LLMs, but really it's packaged across their suite to enable you to come in and do things with that. Same with, I guess, Alphabet, right? Google. Tesla and Palantir are a little bit different, but they're not selling. I guess Tesla, you could look at it and say maybe X because it's owned by Elon and Grok. They have a little bit of an AI play there. but really they're using AI within their business to amplify the business. They're not using the AI as the thing that they're selling to you as the consumer. And I think that's a really interesting thing to be thinking about during this period is like, if you want to build a business, if you want to get really stupid wealthy, I'm talking like billionaire wealthy, it's not going to come probably from putting a container or a wrapper around some pre-existing AI technology. It's about going to the root foundational level and figuring out how can I be one of the shovel salesmen in this equation to use AI within the context of my business to make the business more valuable, not necessarily to use the AI to sell the AI. Because none of these companies are really selling the AI, if you think about it. And so it's like, how can I use this tool to be more impactful? It would be like computers. The personal computer changed, it revolutionized how people work, right? And there's Dell, there was Gateway, there's Apple, all those companies, they did really well selling computers. All of these companies, though, they all use computers. NVIDIA doesn't sell computers, they use computers, right? They sell chips for the computers. Palantir, they don't sell computers, but they use computers. And so what you really want to be thinking isn't how to get rich off of AI, it's how to use AI within your current context to make more money. And that's why I think these companies are poised to do really well in 2025. So that's it. That's all I got, guys. Those are all the tepid takes. I don't know if they were any good. I don't know if this is interesting. It's a little bit of an experiment to evolve the podcast and see what you guys might find valuable. So if you like this type of episode, just do me a favor, reach out on Instagram, take a screenshot of this and share it with your community. Tag me in it, the Anthony Vicino, and I'll see that and I'll know, cool, people are digging this. We'll keep doing more of it. So if you like it, do that. If you don't, then don't. And keep being awesome. I'll see you guys in the next episode.